In fact, later on, we'll show you FX Street, where Ifti and I have done some broker reviews, because we're going through systematically looking at lots of brokers that are available. And we've done some brokers that have offered 2,000 to 1. And we give you an independent view on how that broker fares and comparing it against the more regulated brokers. But like I say, you do have to be careful. So in terms of trading approaches, again, later on towards the end of today or this morning, we're going to talk about how can I manage trading around what I do? Because not always are you going to be there every day to manage and monitor positions, meaning you're not going to be in front of the computer all day looking at the charts. So Forex will give you the ability to trade where you can be there, trading all day. And it can also give you the ability to trade where you put a position in on a Monday and leave it be until Friday or Thursday, okay? We call it swing trading versus what we say here is intraday. So again, flexibility, we're going to talk about the futures market in a moment, but this is really the spot market. So some of you have already talked about this morning when we were just talking generally. One of the key things about being successful in trading is about timing your entry. Timing your entry. So where do I get in? Where do I get out? Okay, and having a proper exit strategy. Now, unfortunately in trading, believe it or not, some people just switch on the platform, they see the markets going up, and what are they going to do? Buy! It's been going up all morning. I can't believe I've missed out on that move. You've got there 1 o'clock in the afternoon, oh my gosh, the pound's rallied. Buy. Before you know it, you're long the pound. And guess what? 1:30 some news comes out, what happens to the pound? Tanks. Oh, can't believe I've done that. Okay. Worse if you've not got a stop loss. You're still in it, it's a losing trade, but guess what? I think it might go up again. Anybody been in that situation? You're riding the wave, but the thing is, it's a roller coaster. So you need to have a proper plan. So market timing, entries and exits. Risk management, you know, if I've got £1,000 in my trading account, I'm certainly not going to risk £500 on a trade. Okay? Yeah, you just want 1 to 2%, small percentage of your account. Okay, I risk 1% of my account of 1,000. It's not much money, is it, at the end of the day? But you're learning a skill. The better the skill becomes and you get consistent, I can increase my risk profile, because now I've got the badge to say, actually, you're doing okay. You'll be okay. Okay. So what are the futures? To me, futures are a great asset class. Ifti and I do trade the futures. Absolutely fantastic asset class for day trading, to be fair. It really opens up your world in terms of trading what we call a centralized exchange. So earlier I said the Forex market's decentralized. You've got lots of brokers. They all buy and sell the euro dollar, but they're all slightly different. You just trade what you see with your broker though. When you look at the actual futures market, then it comes through a centralized exchange. So that means it's highly regulated. If you're a buyer and somebody's a seller, it goes through the exchange, you meet, you do business, trade done, okay? So why is that good? Regulation is high. You don't get the disparities of the buy and sell prices fluctuating and widening. It's much more regulated in terms of the leverage that it gives you. In fact, leverage is great. The multiplier is great on the futures market. You've just, again, got to be careful how to use it. Where the futures market is different though, you're not just trading currencies. You can trade currency futures, but you can trade all sorts. These are commodities, wheat, corn. So again, I know some of you, we talked about psychology this morning. I'll mention it a little bit later, but consistency is the key with trading. Having a plan, having a routine, being consistent, looking at your results, monitoring your results helps you kind of figure out from a psychological point of view what you're doing is working. And when what you're doing is working, you'll get more confidence. When you get more confidence, you're stronger to stick to the plan. When everything's all over, you're not really sure what you're doing. You think it's working, but it might not because I keep changing. Your mind will go all over because it'll start second guessing everything you do. And that's not a good place to be. It's an important place to be from a learning perspective, Because every single one of you, if you're serious about trading, we will all, and I'm not joking, we will all go through the same journey. We will, every single one of us. The difference is some of us make it to the finish line. And I always say it's not a 100-meter sprint, it's a marathon. So don't try and do the 100-meter sprint, because if I say, well done, got another 25.5 miles to go.
We're comfortable
doing
fewer trades, but bigger trades, bigger risk rewards in that. I don't want to be doing 20 trades a day, 10 trades a day. It's just too much. It's too much. You have to be there all the time. You have to manage it. You get the right turning point, you'll get the same result from one trade. So we might take 1 or 2 trades a day, and that's it. And it's enough. It's enough if you got that reward risk, and it's a lot less stressful. But it depends on your personality. Dane he goes for smaller time frame. He's getting good results, but you're more smaller time frames, aren't you, Dane?
more active.
I've been doing smaller time frames.
Yeah, and you've been successful with it. So
how small?
Doing sort of 15-minute, 10-minute, 5-minute
yeah,
executions.
same principles.